Good evening, friends, and welcome to the 33rd episode of JHS Excellencia Series. And a very warm welcome and a very good evening to all of you all on this very exciting session on navigating RBI's fraud risk framework, governance detection and technology. We have a very interesting list of panelists and a very hot topic in the financial services industry today for deliberation. We are indeed grateful to have with us our keynote speaker, Mr. Nagesh Pinge, a very celebrated and a senior chartered accountant. Mr. Pinge is an expert in ethics, corporate governance, risk management, and internal audit. He's a chartered accountant and law graduate from India. He also has completed executive education from the Stephen M. Rose School of Business of the University of Michigan, USA. In a career spanning almost 4 decades, Nagesh sir has worked with many organizations of repute. Actually, he doesn't need any introduction. All of you know him very well. In so many seminars, he has been a thought leader. He retired from Tata Motors in November 2016 as the Chief Internal Auditor, Risk Management and Ethics. Prior to that, he was Chief Internal Auditor of Reliance Retail and JSW Steel. Nagesh sir has also worked for ICICI Bank and its group companies in risk management, regulatory compliances, and leading the group internal audit function. He has been a guiding light for the Institute of Internal Auditors in India and also the II board globally. Was honored with the ACII Award for Outstanding Contribution in Internal Audit 2017 and ICI Award 2014. A regular faculty at the Masterclass for Directors by the Institute of Directors. He has also authored the ICI's Technical Guidance Note on Risk-Based Audit for Banks. I'm sure that all of us recount and recollect his immense contribution to the internal audit fraternity. And Nagesh sir gratefully has accepted our invite to be the keynote speaker on mastering RBI's fraud risk directions, a circular that came out in 2014, mid of 2014, and I would say is a center of excellence piece for any regulatory body globally. It is a one-stop or a single window shop for any fraud risk or fraud professional who's working in the space of fraud prevention and detection. And with that, I would invite our keynote speaker, Nagesh sir, to take charge and give us his keynote address. After that, I would introduce all the other panelists and hand it over to Deepika. Sir, over to you.
Good evening to all of you. Thank you, Huzeifa and the entire team of JHS for having organized a special roundtable to discuss an important matter in it. I think I must say that I always believe Reserve Bank of India, who's our regulator, has truly been acting as a responsible kind of parent for the entire regulated entities, be it be banks, be it be RRBs, be it be cooperative banks, be it be small finance banks, or even for that matter, our NBFCs in all things, upper layer, middle layer, and lower layer. All kinds of people, they are there to help us out, and they literally take care of us in everything. And of course, I must say that of late, their ethos is on refreshing the guidelines from time to time to make it more relevant on that account. And just to take you through something like customers ke upar, they have done cyber security. They believe that you have to do it in a very comprehensive manner. Then digitalized lending also, they try to monitor wonderfully well. And I think because of that, lot of, I would say, things otherwise would have gone into a wrong direction. I think they stopped that at the right time. And now in July 15, 2024, they came out with great kind of things on this fraud risk management. Because I must say that, it's always the financial integrity is an important part of all the BFSI kind of activity. And if you don't have that kind of financial integrity, then we will all have great kind of rising NPAs and also the fraud that will happen from time to time on that account. And I think RBI is really worried about that particular thing. And then they have come out with this landmark circular. I call that landmark for the single reason, more than 36 kind of circulars which were there. They combined it together in a very brilliant manner, and that has become now like the Mecca. You go to the Mecca and you have that particular thing. It's like a standard one to look at it for everything on that account. So for me, it's a privilege given to me by Huzeifa and his JHS team to start the topic on that particular thing. And I really must say that this particular master direction is not just a compliance document. Don't take it as a compliance document. It's a blueprint for ethical vigilance and institutional resilience indeed. I think from that particular thing, what happens is I always believe that when somebody invites me for a discussions around, I get to freshen up my own memory and I try to brush up that particular part. So like a good student would do, I have put together the summarized form of those 9-10 points which are very critical from that particular thing. And this is where I'm requesting all of you, the people who are listening to it, to keep on quizzing and squeezing these guys, the panelists, to answer and respond to that particular part. So I think just to take you through, first of all, as I told you, it's a unified framework for all regulated entities. So something like 36 circulars have been taken together, and goal is to say that they wanted consistency, they wanted very clarity and accountability across the financial ecosystem. And I think it is bound to clip in very, very nicely on all of them. I was on one bank, which I have completed my term, and now I am on one of the largest NBFCs and also housing finance companies. Promptly, all of us have come out with good governance structures. They have created SCBMF, which is this particular, we call it the special committees for managing this fraud related part. And I think it requires, as rightly said, 2 directors who are independent directors, and I think out of them, one should be an independent director who is the chair of that particular thing. So I think this is where RBI believes that board has to intermingle with all of those people to understand the frauds, to look at it from, what we call the second point is early warning signals, and also right kind of red flagging at the right time, rather than, when the things are already damaged and beyond control. There is no point taking it to, this insolvent IBC kind of process. Before that, if you could stop it, they want to do that particular thing. So they come out with a great kind of thing to say, guys, we should have early warning systems and red flagging. There's no question about it. I think most of the banks are already working on that, or they already worked on that brilliantly, and most of them are already complied with on that account. I don't think, very rarely in upper layer or even middle level people will say we are not so far done on that particular part. Banks so positively have gone ahead on that particular things on that account. Then of course, very famous bank was following it up. There's something called upholding natural justice. And this is where, NBFCs were doing all things in a hurry without giving right kind of time. Now banks have been told and NBFCs have been told very clearly, guys, you have to give them 21 days. You have to give them a hearing kind of things. And when you are declaring somebody for right kind of thing, go with a documentary evidence. You just can't talk in the air to say, he has not given everything on that account. So I think this is something which is there. It is also put up great kind of, I must say, penal measures on fraudulent borrowers. So I think when a committee is going to declare, and a bank or NBFC is going to declare that you guys are fraudulent, borrowers are going to come back in case there is a space for negotiation or some sort of taking some shortcuts on that particular verdict. So we need to be very careful about it when we are declaring somebody that you have done a fraud on that account. And otherwise, what happens is, if the person is considered as a fraudulent borrower, he will be prohibited from borrowing money for the next 5 years. Mind you, this is after paying his things on that account. So it's going to be a very, very big thing for him. He will be out of his business forever in life. And that's a strong message which, RBI has given it to all of us. That means, guys, this is not just business as usual. You guys take it seriously, have right kind of documentary evidence, make that person fraudulent borrower, don't worry about it and go ahead on that particular thing. Then, of course, they know that for that to do that, you require what I call the data analytics and market intelligence units, and for which they have said very clearly, create right kind of teams. And I think I know Ajay is working very closely in Aditya Birla Capital. We are all working towards right kind of data analytics and market intelligence units. We are automating a lot of things on that account so that we get the right kind of information at the right time. So brilliant work is happening on this, and I think we should hear from this panelist what all they are doing it in that, like companies like IIFL, or even for that matter Aditya Birla, and also our friend in Bandhan. We will find out what all they're doing it on that account, and that's something I'm sure they will talk about it. One more thing they have clarified is law enforcement agencies. There was a time when people were discussing, should we report, shouldn't we report, what should we do, etc., etc. Now they are making it very clear. Whichever law enforcement agencies you feel you want to get guys going with it, only thing you don't involve is frauds less than 1 lakh rupees. So I think 1 lakh, aaj ke ghadi mein, I think even fraudsters will not spend time on that particular thing. So frauds are invariably more than that in that context. So I think considering all that, almost all, I must say, the reports that are happening, the fraudulent related part will have to go to law enforcement agencies, which is in a way good thing on that account. And I think they have not stopped that particular thing. We were giving a lot of, I still remember because I was at that time very actively involved in the other side in a cooperative bank as a vice chairman. We were giving a lot of those RBI reporting from time to time. Now they managed to streamline that RBI reporting, and they're creating that central fraud registry. So a lot of good things are happening on that particular part. And in this particular thing, again, they have compiled the things together. We should not forget our legal audits, which are very critical for us exposure over some typical limit. And I will tell you one thing, you guys, all of us will have to be very careful about it, because a lot of double funding is happening, and I don't think it is doing with intent. But number of times that in some typical areas, you can get some 2 or 3 original looking documents, and that's something which is, you can't stop that thing from happening. But in the process, the borrower should not raise too much of money, and that can become a big problem on that account. So I think these are some of the things. And then, of course, I must say, implications for corporate governance is in such a way that I think it's not far off. At least when I was on bank and when I was on the NBFC, at least once a year, RBI organizes a meeting where the CEO, the chairman of the bank or the NBFC, and also the chair of audit committee and statutory auditors are called together, and all of us we go through a real, I would say, 1 day or number of times 2 days kind of program as to what is expected from us on that account. So gone are those days when bank board member or NBFC board member can say, "Arey yaar, मैं तो board पे हूँ, मेरे को मालूम नहीं क्या है, we don't know what are the practices, ये तो बहुत बरस से चल रहा था. So I thought, previous auditors have taken it on that account." So those days are gone. We had to work on that particular thing, and we had to, I always say, compliance is a big C, and in that big C comes culture, conduct, and credibility. These 3 C's are so critically important to build around. And I think we have seen some, I don't want to talk about the names of the banks which are there. There are great banks, and there are so banks which are also, you can call it as having run in an ordinary fashion, and probably like a bad boy or a indisciplined guy in the class getting punished in front of others. We have seen some banks like that, but we should be on the right side of the bank, right side of the parent. I mean, that is the RBI on that account. So I must say that it's this July 2024 circular, which they will be talking about it, is not just a regulatory update, but it's a strategic intervention, as I call it. Like, I always believe that after that DPDP Act, where the Data Act is coming on that account, the person is considered as she or her. They don't call it as a he or otherwise. And at the same time, there is no criminal liability on that account. But here, I think very clearly RBI is saying, guys, look at all these circulars. Now you will have to study few circulars, but they are damn comprehensive, damn detailed on that account. And I think we need to embrace this framework, not as a burden, as I would like to call it, but as a beacon guiding us towards a more transparent, accountable, and resilient financial system. So I think, thank you very much once again, JHS, for giving me an opportunity, and I'm looking forward to the scintillating discussions by the panel. Over to you guys, and looking forward, and I will be there to listen to your stories. Bye then. I'm here, but I will just keep myself off on that particular thing. So thank you.
Thank you, sir. Thank you so much for your wonderful keynote address. Amazingly, you have captured the spirit and substance of the entire master direction of July 2024 of RBI in a very crisp and succinct manner. And I'm sure our 200 plus participants enjoyed your keynote address and your power punches of compliance, culture, and conduct. Amazing thoughts that you have left for the panel to take on board, including your thoughts around technology and so much that you spoke in the last 10 minutes. Really grateful to you for that, sir. Now I will move on to the introduction of our panelists. We have a very power-packed panel. 4 people and moderated by Deepika Bisawa, JHS Consulting's Learning and Innovation Partner. Beginning with Mr. Navin Sharma's introduction. Mr. Navin Sharma is a chartered accountant and a seasoned professional with over 26 years of overall experience, including 24 years in the banking and financial services sector. His expertise spans enterprise-wide internal audits, risk reviews, risk management, across core operational, financial, and other domains, implementation of COSO framework, general compliance, Basel II, SOX 404 compliance, information security, business continuity management in leading organizations. Most recently, Mr. Sharma headed the business internal audit vertical at ICICI Bank since 2016, where he was responsible for the internal audits of various functions within the bank and other entities across ICICI Group. Prior to this, he served as Senior Vice President and Head of Internal Audit at ICICI Prudential Life Insurance Company for over 5 years. That is where I think Team JHS and I met Navin years back. He also held senior leadership roles at Fullerton India Credit Company and Citigroup Global Services, where he was responsible for risk control and review and control and compliance management assurance services, respectively. Currently, Navin is the Chief Audit Executive, Head of Internal Audit at Bandhan Bank. Welcome, Navin, and we are grateful to you for participating as our panelist today. I will move on to the
Thank you so much, Huzeifa, for having me.
Looking forward to your insights, Navin. Our next star panelist is Mr. Ajay Kanth. Ajay Kumar Kanth is a seasoned professional currently serving head fraud risk management unit at Aditya Birla Capital Limited. With extensive expertise in risk management and fraud investigation, Ajay plays a pivotal role in safeguarding the organization from different fraud risks. His commitment to ensuring financial security and adherence to best practices makes him an invaluable asset to the team and the company. Previously, he served as the founder of FactPace, a consultancy and training firm. This experience has equipped him with a unique perspective, blending entrepreneurial acumen with risk management expertise, making him a well-rounded professional in the finance industry. He has an experience of over 23 years in financial services, having started his professional career with Escorts Finance. He also worked with ICICI Lombard General Insurance Company before joining Aditya Birla Capital, primarily in its life insurance company. An economics honors graduate from Delhi University, law graduate from Ranchi University, and associate company secretary. He has excelled in legal compliance, secretarial, and fraud mitigation roles. You would notice from Ajay's educational qualification, a very rare combination of these degrees come together in this kind of a role. Earning industry accolades, he actively conducts training and awareness programs at platforms like the Insurance Institute of India. Welcome, Ajay, to this panel, and we are indeed privileged to have you with us.
My pleasure, sir. My pleasure. And thanks for the introduction.
Thanks. I'll move on to the next panelist. Our next star panelist is Hitesh Sampat, Head of Fraud Control Unit, FCU, and Risk, IIFL Finance. a chartered accountant with over 16 years of diverse experience in risk management, compliance, internal audit, fraud control, and process improvement across leading organizations such as IIFL, Finance, Mahindra and Mahindra Financial Services, Dun& Bradstreet, currently serving as Head Fraud Control Unit and Risk at IIFL Finance Limited, Mumbai, with a proven track record in developing and implementing ERM frameworks, ICAP, vendor risk assessments, and RBI aligned compliance initiatives. Awarded in Mahindra Innovation Awards 2020 for one compliance solution in the process innovation category within financial services. That's an amazing achievement, Hitesh. Recognized as a key contributor to strategic risk reporting, board level compliance presentations, and organization wide training initiatives. Holds chartered accountancy qualification and a Bachelor of Commerce from Mumbai University. Additional certifications include forensic accounting and fraud prevention from ICI, financial modeling, known as a strategic thinking professional with regulatory foresight, cross-functional leadership, and building a risk-aware organizational culture. Welcome, Hitesh.
Thank you. Thank you so much for a brief introduction and looking forward for today's session. Yeah.
All of us, we have 200 plus participants already, and all of us are looking towards your insights. Our last panelist, Mukesh Gadge, Managing Director of DBTech, is a leading innovator in governance, risk management, compliance, ethics, and technology. Mukesh actually is a serial entrepreneur. He has created ripples in BFSI industry along with his tech solutions, compliance solutions in the past. Currently, he focuses, with his 2 decades plus experience on Fraud Sentinel 360-degree and AI-enabled fraud case management platforms adopted by leading BFSI companies to streamline detection, investigation, and regulatory reporting. His expertise spans regulatory compliance, risk management, investigations, forensic technology, legal tech, enabling successful GRC implementations for 500 plus enterprises worldwide. A co-founder of Lex Care and Lex School, he supports organizations across 40 plus countries and promotes legal excellence. A certified ethical hacker and a certified forensic investigator, Mukesh drives transformative change in fraud prevention and compliance. A very warm welcome, Mukesh, to you.
Thank you, sir. Thank you so much for the kind introduction. I'm very glad to be here today. Thank you.
Thank you. And I'm sure that this panel discussion is going to be very enlightening with the kind of master directions RBI has given to the industry and the language and the interpretation around it for the first time in history in the banking financial industry. The regulator has mentioned very specific things in the circular like date of detection, date of occurrence, detection, date of classification, etc., date of closure, very specific guidance. And I'm sure that it's going to be a very enlightening discussion on navigating RBI's fraud risk management framework, governance, detection, and technology. With this, I hand over to my colleague, Deepika Bisawa, who's a qualified company secretary with over a decade's experience and has been a compliance officer with some leading banks and NBFCs in the past, to take charge of this session and start the panel discussions. Over to you, Deepika.
Thank you. Thank you, Mr. Unwala, for the warm introduction, and a very good evening to all our attendees joining us today. We are here to unpack what is the most significant shift in India's regulatory landscape, the revised RBI fraud risk framework. Now, as Mr. Pinge rightly pointed out, this isn't just a regulatory tweak, it's a complete shift. Institutions are today expected to not just comply, but to lead with foresight, nimbleness, and collaboration. So without further ado, let's dive into the rich conversation with our esteemed panelists. To start us off, my question is to all the panelists. What's the most significant shift introduced by RBI's new fraud framework? And what's the biggest challenge your institutions or clients are facing in adapting it? Starting with Navin.
Okay. Sure. So thank you so much again for having me here. And since I'm an auditor, I will leave it to the practitioners to kind of tell us exactly what changes the circular has brought about. But from an audit perspective, the way I see it and, has been very, very beautifully summarized by Mr. Pinge in terms of what changes the circular has brought about. I think if I would want to summarize what has happened and what has changed after this circular has come about, I would probably point towards two or three broad elements. One, of course, is it has actually brought this entire concept of fraud management from the corridors of your office to the boardroom. It has, if you look at the fine print of the circular and the intent of the circular, it's very clearly now the responsibility of ensuring that as an organization, as a bank or an NBFC, the responsibility of managing fraud is not just with the management, but it lies squarely and fairly with the board of directors. I think this entire concept of having a committee headed by an independent director with directors being members is clearly aimed at making this entire process transparent, making this entire process very, very independent, and ensuring that it is taken in the right spirit across the organization. As we all understand, everything in an organization depends on the tone that is set at the top. And this clearly is one attempt for the RBI to say, okay, please put a tone at the top. And when they say top, it's the very top. They have put the entire onus and responsibility on the board. Therefore, the processes, of course, evolve in a much, in a very, very different manner as compared to when, the responsibility is put on the organization. The second part, which I kind of think is very important here, is that they have shifted this whole focus of managing and detecting fraud from a reactive kind of a mechanism to a more proactive mechanism. If you see the earlier circulars, and Nagesh sir kind of said that, there were 36 circulars which used to exist. The essence of all of these circulars was mostly reactive, right? If something has happened, you start investigating, you kind of find out what has gone wrong, you kind of look at who's responsible and then start, penalizing and taking corrective actions. I think the shift which has happened because of this circular is now they are saying, no, you cannot wait for the event to happen. You cannot wait for the loss to happen to actually detect a fraud. You have to create mechanism. This whole framework around early warning signals, the whole framework around RFAs, the whole framework, if you see, they are talking about doing a lot of analytics, doing a lot of transaction monitoring, trying to put a lot of, AI technology, trying to put a lot of, this entire thing is aimed at really finding and detecting something much, much before it happens. Because in the earlier framework, it was too late by the time you realize that, you have been defrauded and there's a wrong, a fraudulent transaction which has crept into your process. Now it is more proactive. You need to keep on constantly monitoring the performances. Of course, in some form, it was already being done because on the corporate side, even on the retail side, there's a lot of transaction monitoring which used to even happen. But now it is purely aimed at detecting a fraudulent activity, divergence of fund, etc., used to come much later. Internal audit used to, as we as auditors used to do a lot of post facto analysis, kind of find out transaction and diversion of funds, and end use not being met, and the fraudulent documents, etc. But all of that used to happen much, much later, and most of the time we realize that it used to happen after the account has become an NPA or there has been early default, and then when we investigated, we figured out it's a fraud. But this particular circular aims at clearly making this entire process very, very proactive. You have to create processes, in a way that all of these triggers are flashed off. All of these triggers are monitored by the bank on a very, very regular basis. And if there is any suspicion, you take immediate action. So that's the second large shift that I see that the circular has brought. And the third, and of course, this whole governance process around fraud, including who does the fraud team report to. And in my organizations that I have worked with, there was a huge amount of difference in terms of who eventually in the organization responsible for fraud. In some cases it was with internal audit, in some cases it was with the compliance function, in some cases. But I think that uniformity in terms of saying that it has to be an independent senior level official, predominantly part of the governance and risk framework, is I think one shift that it is brought about, and this entire reporting and the timelines and the principle of natural justice. I think these are some, as as has been stated, a very, very landmark kind of shifts that has been brought about. And this is just a flavor of things to come. This is just one circular, and we are seeing from the RBI perspective that majority of the things that they are trying to do is to ensure that the banks are managing the risk compliance culture on a more proactive basis than a reactive basis. And I think this is a very, very welcome shift as far as assurance functions like us are concerned. We are seeing this whole shift happening from the RBI to push organizations to manage risks more proactively than being reactive. I think these are my points that I wanted to put forward. Of course, I will now leave, the other panelists to make their points as well on this. Thank you so much.
Navin, Mukesh, would you like to go next?
See, what I would like to add is basically, now when we talk about fraud risk, management, especially, for the BFSI sector, and we know how the serious the challenge is. Now, fraudsters are constantly finding new ways to exploit gaps, and at the same time, regulators like RBI, they are also constantly raising the bar with the stricter guidelines and faster reporting requirements. Now, the big question is, how do the institutions not only stay compliant, but also get ahead of fraud? Now, but see, I believe answer lies with leveraging technology, automation, and AI. So I think we'll discuss some of the practical, insights, how technology is, already transforming fraud reporting and case management, and how emerging tech innovations will shape, future of fraud risk and management. Thank you.
Thank you, Mukesh. Ajay?
Yeah, so thanks a lot. And actually, what Nagesh sir, Navin and Mukesh has already talked about. So they have covered, in fact, most of the elements which were there, which the regulator has brought via this master direction in 2024. So they have talked. So I'll just try to give a different perspective to it, which may not be directly coming in the circular or the master direction, but it also means about that. And that is who we are facing currently in this situation in the economy or the corporates, not only the corporates, but as a person also in personal capacity also. We are facing the fraudsters who are not now only the individual fraudsters. They are also now becoming a nexus, like a syndicate. The monetary benefits which they get, that being used for various nefarious activities, as you all know, that it goes to the extent of terrorism and all. So it's not something which can be taken as very simple, just as a fraud. Now, to fight against those where the syndicates are playing, where the nexus is there, where those kind of activities which they are leading into eventually, there has to be some uniformity within the industry also. Earlier, there were those things which were handled by individual, the companies, the banks, and everyone was taking care of them in their own right, and they were succeeding also. But the truth is, we are still far behind the fraudsters. Fraudsters are way ahead in their thoughts. If you talk, Mukesh has spoken about the digital part. They are already into AI and ML. You have seen those kind of things which happens, whether it is the digital arrests, everything, and they are like right now we are doing a webinar. They may also be having some kind of a get together, some kind of a conference, some kind of a meetings where these kind of things are discussed. What are the things which are going right? What are the things where the companies have come out with? And the regulator had to pitch in to bring those kind of uniformity to fight against this kind of a nexus. While bringing those changes, yes, we do agree that whenever the changes are brought, you had asked the supplement question also that what challenges the companies may be facing basis this particular regulation. It may not be a challenge. It may be somewhat where any new thing which starts, you face those kind of issues where whether it is the systems, whether you are prepared for those things or not. Like, for example, the first major change which has been brought about was on the natural justice. Now, some may argue that why we need to give them the kind of opportunity to represent where they have committed the fraud. We have all those things earlier also. We used to file those FMRs. We used to file those reports. We used to have those evidences. We used to be audited. We used to be having those regulators inspecting those, whether we are doing right or not. But there was some kind of a thing which if you read the judgment of the Supreme Court, basis which this particular clause has been added in the master direction, where it was the bank versus one Mr. Rajesh Agrawal. So there may be situations where 95%, 99% you may be right, but 1% still there may be some case where you may not have gone to the extent where you should have gone in collecting those evidences and all. So yes, the natural justice principle, the clause which has been added, it has actually put more kind of efforts on the part of the organization to now. Earlier they used to be, you have investigated the case, you have filed the you have reported it, and then you file it in FMR, and 1 lakh and above you can do that. However, right now you can see that you have to wait for 21 days. There is a detection, classification, occurrence, the 3 stages which we generally talk about. Now in the detection, you have to have you need to first find out what is the early detection. Now there is another clause which has been added, which represents the early warning systems. Now those things are also part of your like Navin was talking about being proactive. Now these are the things which will make you more proactive. Now 21 days, you have to wait for those 21 days. You have to wait for and you need to also give them the personal hearing, personal representation if they want. So those things you have to wait. Yeah, that has actually delayed the kind of exercise which we used to earlier do in 21 days post your investigation reporting. Now you have to wait for 21 days, and then again, if the representation comes, again you have to wait. And if there is something, then you have to make a reasoned order basis the classification. And then 14 days beyond, you have to file the FMR, which is the stage has prolonged the kind of a waiting period for reporting of fraud. But if you see on the backdrop of it, actually you are looking into all the scenarios and coming to a conclusion in which scenarios you are actually giving those kind of taking those efforts. And now if you see, after almost now it's crossed 1 year now, July 15th it had come, 2024. Now we are 2025 in August. So more or less the organizations have settled in what kind of approach there has to be. There has to be synchronization within the departments, within the company. There has to be also understanding within the industry, where because there would be some kind of a new things comes and there are challenges to it. So those things have prolonged it. Challenge comes when there are those kind of cases, like for example, you might see identity theft cases. Identity theft cases. So these were the challenges which were faced by various organizations, like whom to send the show cause notice. Now ID theft has happened where someone has stolen the identity of the other person, the victim, right? Now the address, all the details would not be of the person who has actually cheated the victim. So there those kind of show cause notices will come undelivered. Thereafter, you need to also wait for that, and then you need to publish that in the newspaper, which is also as a legal requirement. Now you need to publish in that legal local newspaper as well as in the national newspaper, and then again wait for 21 days, and then the result order, those things will follow. But what this has done after a year or so, that most of the organization, I believe, has settled. The companies are also looking for tech initiatives where people like Mukesh are helping on those, how to streamline those things and make it a more kind of a streamlined approach, more tech savvy, more AI driven, so that all these things can be taken right from the detection till the reporting, FMR, show cause notices and all can be taken forward there. So that is one of the challenge, but now all the organizations have settled, and we feel that there is a merit to it. Because if I being a victim and I get some kind of a fraud allegation, I need to defend myself at least. I need to have some kind of a defense. Whether I may be right or wrong, that is different, but I need to have some defense. So that is something which is long overdue, and that has come at the right time. And now companies have geared to it. So there were those kind of challenges in the start, but now the companies have settled. But it is also the uniformity of approach amongst the industry which can fight against the nexus of frauds, the fraudsters. And that uniformity has come through this particular master direction, which I believe.
Thank you, Ajay. That was very detailed. Hitesh,
Yeah, thank you.
like to go next?
Yeah. So Mr. Pinge has actually summarized very well initially, in his introduction, that what are the key aspects, that the master direction has tried to bring out. Further, we also heard, how audit has to play the role from Mr. Navin, and how technology has to, make a difference, and how fraudsters are ahead of us, one step always that we see. But the new RBI directions that has come into place, I would say that it is aiming more to strengthen the fraud risk management framework within the NBFCs and banks, and thereby, ensuring that proper proactive detection takes place, timely reporting happens, and stringent follow-up actions are taken. As we heard that, SCNs have to be issued, which is something that the regulatory entities, including banks, NBFCs, cooperative banks, now they must follow this, and they have to issue an SCN with a required timeline that one needs to follow, which is 21 days for the borrowers to respond from the date classification of a fraud has taken place. And yes, as we heard, there are certain judgments in the past, by the banks, etc., based on which it made the regulation shift towards this particular natural justice kind of requirement. Further, there is a governance structure which the RBI direction talks of now. As we heard that, there is a special committee of the board now which has been placed, and this special committee has to oversee the fraud and monitor and follow it up. So it's not only that, cases are being identified, they are being classified, and they have been reported, but yes, it has to be brought to the notice of the board, and board has to also act upon that, because at the end of the day, they are the ones who are finally responsible to answer on the any escalations or the increase in the frauds that takes place. Over and above that, there is also an internal fraud committee you call, or a senior management, which also has to carry out the implementation of such kind of the fraud frameworks. So it's a two-layered kind of structure, governance structure that RBI has tried to lay out now. Another key aspect that we've been, hearing from all of the speakers was on the EWS. So the framework now mandates either to implement to the regulatory entities who are not yet, they're aligned with the EWS, or to upgrade or enhance their existing early warning signals, I would say. So they have to have their systems in place which will give an early warning signals or a triggers to identify any kind of the frauds which will not take the entities by surprise, and it will be something that fraudsters can be looked at, or actions can be taken by the companies at an early stage. There was one more important aspect that has come across was on the red flagging mechanisms. So this again is something that one needs to have in place, which would require, I would say, a dedicated data analytics or an market intelligence units in place, which can enable them to monitor it on a real-time basis, detect and prevent the frauds. So, these were the three significant shifts, I would say. But again, if one has to see on governance structures, I would say any kind of a smaller REs would have, kind of some challenges on operational side to implement, etc., which we heard that, it's down over the line of 1 year now, which Mr. Ajay Kanth also mentioned. So by now, entities would be readily available, but yeah, still there are some challenges with the payment banks or someone, who has to get aligned with it. Technology upgradation is something that one needs to bring into play by either enhancing their existing shift from a complete I would say a manual way of doing things to an automated way of transforming the entire process. So and further enhancing, I would say, the audit function. So, as Mr. Navin said earlier, there were different ways, and different ways he has seen how the frauds are being detected, classified, and different teams doing it, which now has to get much enhanced in timely and fraudulent examining it and reporting it, because you have a timeline to, issue the show cause notices, post which, also ensure that it gets represented to the board, and finally it gets filed within the timeline that's laid down of 14 days to the RBI. Enhancing EWS and RFAs, which I said, it's required that, entities need to enhance their existing systems. But again, there has to be some quick turnaround time. So there is still a kind of an challenges that entities are facing on integration aspect on the EWS side, and also a cost that gets involved, in the implementation aspect out there. Managing a reputational risk is something that one needs to ensure, along with investigation and thorough investigation, and also investigating it on a timely basis. So as we know that the number of frauds increasing, and it's something that the organization is being hit on the reputation aspect. And as Mr. Ajay Kanth rightly mentioned, these days things have changed. It's not an individual approach of doing the frauds, but it's more of a syndicate or a nexus that people or the fraudsters are thinking, and they are trying to manipulate and make use of the systems gap that are there. Last thing, yes, I would like to add is it's more on a cultural and an organizational shift that one needs to see. And it's not only about tagging the frauds to the system, but it's now more become on a rule-based kind of approach, where board needs to review the policies there, and regular reviews that needs to be conducted. So it's a complete shift in the mindset that one needs to adopt from transparency and accountability perspective. That's all I think I can come across on the major shifts or the changes that one needs to add to it. Yeah. Thank you, Mr. Kanth, for your
Thank you all. This really paints a holistic picture from governance to the technology and internal coordination layers. It's clear that this isn't just a compliance exercise, but it's an organizational transformation. So now let's zoom into some specific areas with some questions to our panelists. My first question, starting with you, Ajay. Let's get deeper into the risk detection. With RBI new emphasizing early warning signals and red flag accounts, what new qualitative indicators should institutions be watching? And basically, beyond just the financial red flags, what else the financial institution should look for?
Yeah, so the financial, of course, that was there, is there, and will be there forever. So that financial, there is nothing, there is no two ways about it. Apart from that, there are various other, which is like, for example, there are so many news comes out, which may or may not be the factual, but it gives you some kind of a trigger. Like, for example, there are those newspaper reportings where some kind of action has been taken, some kind of fallouts had happened in corporates, kind of big corporates or mid corporates. There are those kind of scenarios where the directors may have resigned. There may be some kind of things which which may or may not be financial. There are other layers to it. Whether there is any spike in the employees. Sometimes in the EPFOs you see I'm not talking about the good companies, but these kind of companies where there may be some intent of having some these kind of frauds, where there may be certain spike in the employment registration in the EPFOs. Now, those kind of things are also very crucial these days. The legal parameters, the legal kind of actions. You see, there are lots of courts now which are now digital. There are police stations now also which has gone. Still, there is more to be done on that, but still there are digital. So, and there are those solutions also available where you can at least get some sense about if while scrubbing through those legal cases and all, and those things are provided by many of the fintechs. I'm sure Mukesh may also agree on that. And so those things are also there. Apart from that, there's social media. The social media plays a very, very crucial role these days. You may sometime, I'll just give you an example of not from the NBFC, but from the insurance. Like, for example, there used to be some death in the family. Death has happened. The policy had been taken, which was prior to the issuance of the insurance policy. The death had already happened. Now, all those things have been, and as I told before, there's a nexus in the background which plays on these things. Those things have happened. Now, when you are investigating the case, you find out that, okay, there's nothing, you don't get any evidence, and they know. And that's also, we need to be bearing in our mind, that they know what are the changes which are happening in the industry, whether what kind of regulations are being brought. And in fact, it may be somewhat embarrassing, but if, like I had a chance of interacting with a couple of fraudsters through some law enforcement, where what kind of things they actually look at is one, what is the timeline given to the companies? Like, for example, in the insurance, there was that 3 months, there is a time frame where you need to close the investigation. Now they will wait for that 3 months, hold those evidences. They will see that those evidences don't go through to the company so that those claims or anything are getting rejected. Now, during that time, sometimes it may happen, and there are agencies, fintechs also available. In the EWS also, we are trying to see those kind of angles also, where whether without any intention, there may be some kind of things which has been already put on the Facebook or somewhere where there has been death shown there in the family. Now they may not know, they may not go through it, but while scanning, you may get that, and that may play a crucial role in your as an evidence. So there are those kind of social media platforms. There are those checks which are also connected to the MCAs are there, the EPFOs are there, the newspaper reportings are there, those court cases are there, police stations are there. Now you see that digital, you can file online also, FIRs are registered online. So all these kind of combinations apart from the financials can be one of your triggers and act as a good early warning signal for you. Uh, Apart from that, we are also using one of the tool from one of the which all of the companies may be using, would be using, the Hunter Experian, and all the companies are there, including I believe the panelists, they would be also using Hunter on the onboarding stage. They also have one tool which is Hunter Retro, which also acts as an EWS signal for us, which is for the retail side. If someone has taken a loan from the other NBFCs or the banks, post they have applied there, post they have already taken a loan from us, you may get a trigger that this person had applied elsewhere and there something has happened post our loan, which they had rejected that loan of that particular borrower. Now that gives a tool, that gives a red flag to us to actually investigate in detail whether this particular and monitor it closely if it is paying. So that is another tool which actually helps. And this is more on the retail because I believe the Hunter is more on the retail for all the companies. They can correct me if I'm wrong, but that is another tool which actually helps us as an early warning signal.
Thank you. Thank you, Ajay. That's so insightful, especially how behavioral cues can serve as an early smoke before the fire. And often these things gets missed. So yeah, this was a very insightful answer. My next question goes to Navin. Let's hear another dimension from him. Navin, in your experience, what are the most common governance blind spots that could increase fraud risk, and how can boards proactively plug those gaps?
Yeah, so basically, I think, if I have to talk about the blind spots, and of course, every organization kind of suffers through it. Predominantly, one is clearly, which I mentioned in my earlier message, is the absence of the tone at the top, right? This entire narrative of, zero tolerance towards any fraudulent activity, it kind of gets played out, but not in the real, in spirit. So that is one. Secondly, of course, if you have a large organization like ours, which is there across so many geographies, so many branches, so many customer contact centers, so many operation centers, etc., etc. I think this communication, the consistency of communication across it to ensure that you have uniform policies, you have uniform processes, and the communication goes right to the last man, that is not really what happens, and we've seen that getting missed out. Thirdly is about this entire, and I mean, which of course as an auditor I can keep on talking about, is about how processes get compromised in the name of businesses. There are practices and activities which get justified in the name of increasing the business of the organization, and so on and so forth. And there are of course various level of people who justify doing something which clearly may not be acceptable from a fraud management or from a risk management perspective. I think that's another aspect which comes to it. Fourthly is, I think, what I believe is what I've seen again in my own personal experience is this whole, governance framework around accountability. Everybody talks about it, saying, oh, you know what, if something happens, people should be, identified, people should be punished, etc., etc. But once it comes to taking action, I think a lot of organizations are a little reluctant. One, of course, they don't want to take account. I mean, accountability typically gets fixed, but it gets fixed only at the bottom rung of the organization. It really doesn't flow through a supervisory process to people senior. People say, oh, you know what, we found a fraud, we found something happened, so let me punish the person whom I went with. What has been the supervisory process? What has been the governance failure? Which of the other department did not act? And I'm also kind of reluctant to say that in a lot of cases, even internal audit has not done its job to identify things on time and so on and so forth. So this whole tone at the top in terms of saying that everyone across the chain should be accountable, not just the people at the bottom. Fourthly, this whole fifth point is about this whole seriousness around, everybody talks about having a robust mechanism of whistleblower, and you can raise your voice, etc., etc. But in reality, what we have seen is that organizations are reluctant to act. There is, it mostly this whole whistleblowing process policies remains on paper, and people are very reluctant to raise their voice if they see something wrong happening, etc., etc. I think that's another one. Secondly, on the corporate side, again, there are practices which are, I mean, I'm talking about the business in general as a bank, but then on the corporate side, we see business practices just to please get a good quality customer. There are shortcuts being taken. There are, of course, justified malpractices in the name of doing business, having a good customer service, and a lot of people justify. So all of those things are there. Commonality of message in terms of training the employees, getting uniform processes implemented, and so on and so forth. So these are a lot of things that we see of different organizations struggling, and the organizations which are able to put all of these correctly. And even, when we typically, I think in all our conversation till now, we have been restricted to a customer fraud or maybe a fraud which is on account of a banking or NBFC transaction. I think the biggest, one of the big element of fraud these days is this whole cyber incident, cyber security, this whole what kind of mule accounts are getting opened in the banking systems where people are parking money, this whole terrorist financing, this whole, and money laundering which happens through these accounts, etc. I think these are also, a large segment, and, these are risks which are going to be more real and relevant, even when you compare to a customer fraud of a personal loan or a home loan, etc. Those will become very, very minuscule when you compare to these large kind of external fraud. I think here again, what I see is that this whole culture of having a very, very strong, robust IT environment, ensuring that the cybersecurity practices, this entire, IT controls, general controls, these are things that looks very rudimentary, but they go and they all kind of bind together to make an organization fraud resilient or, fraud proof. So these are some of the challenges and, things which I would say are blind spots, and a lot of organizations like us where we have such a distributed network we go through. I think the answer lies in the question, of course. As a board, I think the entire tone at the top messaging has to be fixing accountability right up to a very, very senior level, ensuring exemplary actions whenever we find practices or we find frauds which are happening, ensuring the communication around the do's and don'ts, the communication around good practices or incidents has to be widespread. People should be talking about it. Everybody should know this organization doesn't. I mean, it's not just the board responsibility. Of course, it is the responsibility even of the senior management when they go around the country, visiting branches. What kind of messaging are they doing? What kind of communications are being propagated? Is the whole culture in the organization to do business at any cost? Is the entire culture in the organization to please a customer irrespective of the repercussions? So these are the things that the board and the organization should keep on, the senior management organization should keep on emphasizing, re-emphasizing, ensuring the actions are happening, ensuring the policies are in place, ensuring if there is any internal audit finding or if any compliance breach which happens, it is taken with the right amount of seriousness so the message goes through the organization. I think some of these things, if we do, I think we I mean, beyond what the circular says, I think the organization will be able to build a very, very strong anti-fraud mechanism.
Yes, I completely agree with you. Actually, compliance is everyone's responsibility. Having those policies on paper, it's not just enough these days. You have to, the execution and oversight of it is equally important. With that, moving on to the next panelist. Hitesh, my next question is for you. You sit right at the junction of fraud prevention and coordination. How do you ensure seamless collaboration between fraud control, legal, and compliance teams, especially when the time and accuracy are critical during investigations?
Okay, so collaboration is something that has to happen seamlessly. There are multiple departments, in the fraud cycle that one has to coordinate. So it's audit, it's legal, it's compliance, it's an FCU team itself, and then finally, so legal also involved in it. So it's like, one has to ensure that there is a proper investigation that happens on a timely basis. It effectively, the fraud resolution happens, and the compliances are also regulatory filed, etc. So there has to be a proper coordination between all the teams, for which one, you need to clearly define the roles and have an escalation matrix to it. So for example, an audit or a fraud team, it will detect, it will do some preliminary analysis or an RCA and then further report it. Your legal or a vigilance will further assess, and see what's the implications on it. Will handle the LEAs, as Mr. Pinge rightly mentioned that, this is a law, enforcement agency which is now coming into play, and one needs to, not bypass that route. And finally, there is a compliance who has to ensure that, RBI timelines are being met and we report it, accordingly. You need to have again a proper centralized investigation platform. So if one uses that, or a fraud management system, then, a proper ERM kind of a triggers would be generated on a real-time basis with an updates to it. Proper repository would be there in respect of the documentation that one would like to see and maintain for future audit trails. Decisions will be taken accordingly. Currently we've been almost finalizing with Mukesh's company with the DBTL, which has to ensure that all these teams are aligned and, assigning happens through a proper system. So working, with the same information. So it's a one platform where one can see the holistic picture to it. Further, you need to have, as we heard that from Mr. Navin also, you need to have a proper SOPs in place or a procedure, standard operating procedures, which has to be there so that the fraud investigations, etc., are being there as per the laid down procedures. You need to regularly do or conduct some team meetings or a review on the RCAs or the cases that are being reported. Either you do a weekly or a regular interview or an ad hoc based, cases monitoring to it, which will really add value to the departments and remove any bottlenecks, if any. Further, if you can have a designated spokes to liaison between each teams, so the things become easier rather than running around all the people in the team, there is a designated spoke to it. Yes, there has to be regular trainings, I say, or joint training sessions that one needs to conduct. And conducting such training sessions would enable in identifying the fraud and any triggers, etc. As Mr. Navin said, having whistleblowing policies, etc. on paper, but it's like raising the alarm at the right time. Unless one raises the alarm or raises a red flag at the right time, it makes no sense of conducting trainings. unless and until it's been done. So there can be a kind of a culture or a kind of a culture of a vigilance with some rewards that one can add in the system so that timely fraud escalations takes place. So that can add some value, and if you deploy a proper work tool flows, which are aligned as per your RBI master directions. Having tools in place is just kind of an input and an output. But if you are aligned with your RBI latest master directions on the tool, I think the reporting happens on time. Your tasks are delegated properly, and deadlines are being met. So yes, periodic updates lastly I would say to the senior management or the board level committees. This is something that again there is a proper visibility on the leadership and accountability across departments that we've been hearing. So I think these are the few things that one needs to ensure when you're coordinating with multiple departments and reporting as per the norms on the timeliness basis. Just to add last thing, what Mr. Navin said on the new types of frauds, etc. It's not only cyber IT extended, but now it's vendor frauds also something that one needs to actually look into, because vendors are now trying to manipulate, as we heard from Mr. Kanth, identity theft fraud. So vendors are also trying to manipulate on the identity theft fraud. So this is also something that I just wanted to add to it. Yeah, thank you.
Exactly, Hitesh. It's not just about having the right technology. It's mainly the transposition between the people, processes, and the platform that actually makes the difference. Since we are talking about the platform, now my next question is for Mukesh. Mukesh, we know fraud reporting to regulator can be tedious and often manual task. In your view, how can automation and workflow integration simplify and streamline this process?
Okay, yes. Fraud reporting is actually tedious and complex. What I have seen, the fraud mainly, the cases mainly gets reported from various sources. Sometimes the collection, audit, sales, whistleblower complaint, early warning signals, and from many sources. Now, once the fraud case comes, the concerned department, either FCU or vigilance, they need to review the case, assign the case to an investigation team. Then investigation team does the investigation. They provide investigation report with their findings. Now the investigation report also further goes through multiple reviews based on the threshold limit, and then depending on the outcome, whether it is fraud or no fraud or just a COC violation, the case moves ahead. If the fraud case, then the case goes to a legal department, for issuing a show cause notice. They further need to wait for 21 days for response, and then finally issue a final order. Now, once all this process is done, legal leg is completed, the case goes to a committee for a classification. Once the case is classified as a fraud, then the reporting is done by some other department, or sometimes it is done by vigilance, sometimes it is done by compliance. Okay, so once the case is classified, within 14 days, they have to report to RBI in a certain format. So they need to prepare the FMR1, they need to collate information, from various departments, okay, go through all the investigation report and prepare the FMR1 manually, okay, and make sure that it is reported to RBI within 14 days. Now, this manual preparation of regulatory report is not only tedious, but also prone to errors. And in the whole process, actually TAT monitoring becomes challenging, and this is where the delay happens actually. And this delay increases the regulatory risk and reduce the ability to timely take action on the cases. Now this is where the technology can change the game. Now, if the organization has a centralized, robust case management system, whole process can be automated from the case reporting. So case can be directly reported into the platform. Based on the certain workflow and rules, case can be directly assigned to an investigator. Let's say if the case is coming from a north region, the investigator directly it assigns to a north region investigator from a north, and investigation quickly starts on that. Further, once the investigator leg is completed, the various departments which are there, like legal, they can generate the show cause notice directly from the platform in a prescribed format. Then, they can issue a notice. The turnaround time for 21 days monitoring, the system can send various reminders, and so that the TAT is not missed. And further, the since the every department is collaborating on the platform, the regulatory reports like FMR1, 2 can be automatically generated from the platform. They don't have to, prepare the reports manually, because all data is available in the system. The case initiation form, the investigation report, and from those reports, the system can pick and, create a FMR1 report, for the organization, so that they can just quickly review the report and submit to RBI. Now, another advantages of technology is, repository of all cases and documents. So all the cases that are there, fraud cases that are there, so you can create a repository of all the cases and documents in the system. Whenever you need any document, click over button, you can access any document. Plus, the complete audit trail can be maintained. Like every action is logged. So when the case was initiated, when it was transferred for investigation, when it was classified, when it was reported to RBI. So complete audit trail can be maintained, so that the organization is equipped to handle any sort of internal or external audit. And even if the RBI audit happens, they can also pull out the audit trails and show to the regulators. Further, various dashboards and reports can be generated. Various analytical dashboards can be created, where they can see how many cases, product-wise, zone-wise, region-wise, branch-wise, how many cases have come. They can do a trend analysis. Last quarter, how many cases were there? This quarter, how many cases are there? So various type of dashboards can be generated. Reports can be configured for internal committee meetings or regulators. Plus, the integration can be done. The user, they don't need to manually prepare anything. With the way of integration, API integration, let's say if the fraud case is internal fraud case against any particular employee, so system can be integrated with internal HRMS system. So where the data can come from a HRMS system, and you don't need to manually feed the data in the platform. So to sum up, actually, technology basically transforms entire fraud reporting from a very painful, this manual task, into a very structured and transparent process. It will save a lot of time. It will reduce a lot of error and increase the productivity. And this will also boost management's and regulators' confidence, actually, if such system is available in the organization. Thank you.
Yeah, rightly mentioned, Mukesh. When we have the reporting becomes a part of the workflow, it goes from being a headache to it becomes very seamless. So that kind of operational intelligence we're looking for. So we have received quite a lot of questions in the chat box. So I would like to pick them up as well. So first question is from Mr. Sudeep Kumar Jha. What all banks can focus for market intelligence perspective? So who would like to pick this question? Maybe Ajay can pick this up.
Okay, sure. So, see, market intelligence, it's not only for the banks, but any company and any fraud, the person who is part of the fraud department. This is one of the sources which is very, very important. As you know, you can, and the audience can, the listeners can recollect, in the police department or the law enforcement agencies also. It's not the law enforcement officers who themselves are able to crack many of the cases. They depend on those informers. They depend on those intelligence on the field, right? There is those market intelligence. The latest example I can give, and everyone can relate to it, is Operation Sindoor. Like you may talk about the wizards, the technicalities, the kind of missiles, and it was first war where there was no actually on field, army was not fighting, it was being fought on the on airfare and the drones and all. But the people may not remember the actual intelligence basis which these kind of the missiles or drones, where it has to be filed, where it has to be the targets, which are the targets. Those targets and all, there are lots of efforts goes on the grounded intelligence which they get. The same kind, the similar, it may not be of that extent, but the corporates, the banks, the NBFCs, or any of the BFSIs or the companies they also actually thrive on these intelligence which you get from the field or the industry. One such intelligence, there had been cases which has been cracked basis. Someone may have reported to you that something is happening this side. Whistleblower is another, whistleblower is also one of the intelligence only, but on the ground intelligence, the market intelligence which you get from other companies, which you get from the investigators, the verifiers who are going on the field. So those intelligence, if you gather and you act on it proactively or promptly, you will be able to safeguard lots of financials for the organization as well as the reputation. And that plays a very, very vital role. So anyone, whether it is the law enforcement, whether it is the military, whether it is the corporates, everyone thrives on the market intelligence. And market intelligence, that's why there is always a need to have collaboration amongst the industry. There is always, people should collaborate for the negative things. We are not, no one is asking for something to share. There may be data privacy, there may be other things. DPD, those laws are also in place. You can't share those things, but negatives, the negative things, the banks have good kind of intellect basis, the CFR, the Central Fraud Repository, which the NBFCs still are not able to gain access to, whatever may be the reason. But what I can personally talk about is that the intelligence which is on the negative issues can be and should be shared amongst the companies, and that act as a very, very important tool for cracking and fighting against the fraudsters.
Thank you, Ajay. Next question is from CA Satish Kumar Gupta. What to look into the internal audit of fraud risk management framework as required by RBI in this direction? So maybe Hitesh can take this question.
Yeah,
Since it's an audit
Okay,
question,
Navin.
probably I'll kind of take
Okay,
this up.
go ahead.
Yeah. No, so basically, I think two, as I said, two broader aspect. One is this whole circular, the implementation of this circular in letter in spirit is something that every organization should do, which of course my organizations have already done. Where you start from the the structure of the fraud management department, even things like the seniority of the person heading that department, whether the committees have been constituted the way it has been, is the organization following the appropriate, RFA, EWS kind of mechanism, what the timeliness of report. I think everything that we have talked about till now about the changes that have been brought about and what are the salient features of the, all of these should definitely become a part of an audit process. And if, of course, it is needed that you do this is a very, very specific audit that you do rather than, covering it as part of, the overall some other audits that you do. So at least the organizations that I have worked with, we have done dedicated thematic audit around this area and the implementation of the circular, which cover every aspect of the circular, including this whole customer, whether we are giving the law of natural justice principle has been applied, what kind of timelines are kind of given to the customer to respond, is the notice being sent appropriately, what kind of tracker is being maintained, what kind of reporting, the entire accuracy and completeness of the RBI reporting. I think that is on the circular itself. But beyond that, of course, as an audit function, we really have to be very, very aware of what are the fraud risks which exist across the various, various functions of the bank. And, simple ones are where, in a branch, what kind of, activities are happening, and is there an element of fraud? And the complex one are in the, in the area of course, which I discuss is cybersecurity, vendor security, as somebody mentioned, vendor frauds or, mule accounts, all of those, whether your AML KYC processes are ensuring that the right set of customers are being brought in and all that. So I think that is the larger challenge. The audit around the implementation of the fraud circular is fairly easy because the circular is fairly detailed. You exactly convert that into a checklist and start assessing your organization's processes and preparedness for that. But to be able to manage the overall fraud risk of the organization is what we have to be more cautious as auditors and more wary of, because increasingly the questions are being asked from all lines of defense, including the third line, about what is their ability to be able to proactively detect fraud. It is not just the fraud management team, but even internal audit is expected to find out frauds even before they happen. And the questions, I hear these questions even at boardrooms to say, oh, fraud ho gaya, what was internal audit doing? You guys are covering everything. Why could not you find it? Irrespective of whatever disclaimers we put in our report, the expectation from internal audit always is to be ahead of the curve and find something out even before it happens. Yeah, there are several things. Of course, one is move, and I can keep talking about it, but probably this is not a session I would want to spend time explaining. But I think our whole approach, even for an auditor, is to become more proactive than reactive. I think we all will have to move in a direction of doing real-time monitoring of risk, real-time monitoring of transaction, etc., which will kind of give us an ability to preempt things and identify fraud or identify any process, any risk even before they materialize. So I think, of course, that will require a completely different discussion to what are the things that an auditor will do. But the fact remains that it is also the responsibility of a third line of defense function to be able to identify, detect, prevent, and ensure the organization acts on fraud. So it is equally our responsibility now.
Just to add on what Mr. Navin said on this, just a quick one. So it's more of an analytics that one has to see from a future perspective and generating an auto triggers or an alerts, which could restrict from further processing or initiating the new disbursements or the loans etc. to the customers, so that they don't further attempt any frauds to it. So it's a more of a 360 customer view, and changing from a manual way of looking things to prompt action with the flag patterns or the trends, continuously getting monitored through a fraud engine, etc. Yeah.
Thank you, Hitesh, for the addition. One last question. This is, do we have any AI tool to detect frauds? And yeah, this is the one. Do we have any? So maybe Mukesh can answer this one.
Yeah, I mean, there are many tools available in the market now for transaction monitoring tools, which can real-time basis monitor the transactions and throw some alerts and patterns. Like I could see there is one company called Fitzai, Actimize, SaaS fraud management. These are the tools which are available for transaction monitoring. Plus, there are tools available, for identity verification and KYC tool, like HyperVerge is there, so this is for the facial recognition, document scanning, and liveness check to stop fake accounts and identity theft. Plus, you can also look at Fraud Sentinel for fraud case management solution, which also has AI into it for analyzing the fraud trends and everything. Plus, there can be there are tools actually which are available for deep fake fraud detection also now. Okay, so I think I'll put one list actually maybe in the chat box, which are the tools generally which are available in this area, which the member can see.
And just to add, sorry, just to add that to what Mukesh was saying, there are various APIs. There is a rule-based engine also now getting available, which is AI ML, not only AI ML. That is LMM also, which will give you those kind of consolidated report basis which you can rate them as red, green, amber, those kind of, and which like on the onboarding journey, because that mostly plays on the onboarding journey where you are preventing those frauds. Now, these kind of tools, APIs and technologies, I'm not saying that there is 100%, but it's still moving towards that, where you can at least get those kind of things where these kind of frauds can be prevented. We are able to do that through various APIs, but we are also evaluating certain more fintechs and all. One, Mukesh, is there where we are doing on the case management and other aspects, but there are also at the onboarding stage, those things are there. Apart from that, there are various tools which are available for the property related also, which is something which is right now not that exhaustive, but it is going towards that, because you know that property related frauds are also happening a lot, where people may be showing one property, but actual property may be something else or may not be there. But those things are created, and now the SROs, various states are getting digitized. So all these things are also helping on these prevention, but there is still way to go in that.
Okay. Thank you. So, in the interest of time, I thank you all the panelists, and I would like to invite my colleague Tahir Peppermintwala for vote of thanks.
Thank you. Thank you. So good evening, everyone. As we conclude today's session, I would just like to briefly share the key statistics of the RBI annual report 24-25, which mentions that there has been around 24,000 incident of fraud which has been reported to RBI. Although this statistic speaks that there has been a dip in the number of fraud cases, but going by the amounts, the total fraud amount reported is to the tune of around 36,000 crores. And the digital fraud is one of the key battleground, actually, which is the key culprit or the key root cause of majority component of this fraud. So I think this statistics underscores the importance of today's session. So JHS team would like to sincerely thank and express the gratitude to Mr. Nagesh Pinge, Mr. Navin Sharma, Mr. Ajay Kanth, Mr. Hitesh Sampat, and Mr. Mukesh Gadge. I mean, it has been a wonderful discussion, and the insights on fraud detection, early warning system, cross-functional collaboration couldn't have been more timely. In fact, I would like to reiterate some key words which has been given by all the speakers, all the panelists, especially, I mean, this circular should not be treated as a mere regulatory update, but a strategic intervention. I think this circular also talks about a paradigm shift, which Nagesh sir has also mentioned from a corporate governance perspective, maybe a change in mindset to treat this circular as a ethical vigilance and an institutional resilience. So with this, I would like to thank all the 200 plus participants for all the engagement and all the thoughtful question. I mean, at last, I would like to say, stay vigilant and stay prepared. I mean, and maybe soon RBI may come up with a dashboard on a real-time digital dashboard. So that will also give an insight to all the regulated entity institution on a real-time basis on the number of frauds which have been reported. So thank you, everyone.
Thank you for the wonderful session. Thank you so much.
Thanks.
Thank you. Good evening.
Yeah, thank you,
Thank you
everyone.
all.
Thanks a lot.
There are many questions that we could not take. So my sincere apologies to the participants, but we will draw them from the chat box, and maybe we'll pass it on to the panelists separately over email and get back to the participants to the extent possible. And with the permission of the panelist and the keynote speaker, if you all permit, sir, maybe we can place the video recording, in public domain with your permission, if everyone is okay. So all the participants can benefit from the wisdom and the knowledge that has been shared today.
Sure.
Sure.
Thank you.
Thank you.
everyone.
Thank you.
Yeah.
Thank you
Thanks
so
a lot,
much.
everyone.
Thank you,
Thanks a
JHS.
lot.
Thank you, everyone.
all.
Bye.
Okay.
Thank you, everyone. Have a great day.
Thank you.